Good afternoon and welcome to our webinar, Accounting and Auditing Common Issues. I'm Brendan McKittrick, a director with James Moore & Company, and I'll be your host and moderator today. On behalf of our firm, I'd like to thank you for joining us. Our panelists this afternoon are Zach Shalafor and Andrew Laughlin. Zach, as you know, is a partner at our firm and leads our government services team. He has 15 years of experience serving state and local governments. Andrew is the president and CEO of Aclarion, the company he founded last year, and he also has 17 years of public accounting experience. Aclarion provides outsourcing, consulting, and advisory services, as well as workflow automation and dashboard reporting software to Florida's local governments. So the agenda today, again, pretty broad, but we're going to be talking about the auditing and accounting common issues. And again, we're hopefully cover some of your questions throughout the presentation, but if we don't get to them, we'll try and handle them at the end as well. So the topics of discussion, we'll talk on, kind of give you a little bit of background on our experience, then touch on kind of overall best practices in kind of audit and accounting, then go into interim and planning considerations, as well as final field work and reporting, and then also address any common GASB deficiencies we may see. Again, please ask questions throughout the presentation, and hopefully we can try and address all those for you. So one of the questions already submitted, is there a handout for the session? This session? It says handouts on the side. Again, if you can't find that, we'll be sure to send those out later, but it should be on your dashboard on the side. So our backgrounds, I kind of find this kind of funny, but yeah, that's right. We don't do taxes and we're not the IRS. I still think after 11 years in public accounting, still not 100% sure my parents realize I don't do tax returns for the firm. As I mentioned earlier, I'm a director with James Moore & Company. I'm a CPA as well as a certified information systems auditor. I came out of school working with a national firm, working in their assurance practice, specifically in their IT audit group with a focus on SOC reporting, internal audit, and financial statement audit support. I did that for about 3.5 years, then decided to get into the really exciting stuff, jumped into more traditional public accounting work, moved to Gainesville and started to work with James Moore, where now I focus primarily in government and higher education. So that's a little on me. Before I hand it over to Zach, I want to make sure that both Zach and Andrew kind of provide their unique perspectives of both kind of the public accounting roles as well as kind of sitting in the finance director role. So with Zach, I'll hand it off to you.
All right, thanks, Brendan. So yeah, this is just kind of taking a step back in terms of the structure of today's webinar. It's very much designed where we've got some topics we're going to hit, really looking at the overall audit process and flow, rather than a traditional webinar that's just us kind of discussing a GASB update, working through the standards. It's going to be a lot much more discussion oriented, and we do welcome questions, as Brendan mentioned, whether it's from an auditor perspective, auditee, or otherwise, really everything is kind of fair game. We do have the evaluations after the session to get CPE credit. I would encourage everyone in that just sharing, how do you like the structure of a webinar? Because we definitely like to, try to do things a little different, think outside the box, and also have fun while we're doing it. So today will be a little bit different, but hopefully there's some good information that we work through. And you all enjoy it. From a background standpoint, I'm an audit partner with James Moore & Company, so audits are the bread and butter, but as Brendan mentioned, have worked with one municipality as a contract finance director now for the past about 2.5 years to kind of see things on the other side, and it definitely gives you a totally different perspective when you're on the client side. Having that audit background as well, which I'm sure Andrew can speak to even more based on his experience and what he's currently doing now. So Andrew, I'll kick it over to you to kind of share a little bit about your background and the perspective that you bring to the table.
Yeah, just happy to be a part of this session, kind of trying to speak from the other side. I've got obviously a little experience on both from the audit side in my prior days as an audit partner, but then also, within my company providing outsourced finance director, CFO, accounting services to Florida local governments, seeing things from that perspective. So happy to lend my opinions when the questions come up. So looking forward to the session.
All right, and before we do move on, Brendan, I do have one quick question for you. Hopefully I've been fighting off a cold here, so hopefully it's not going to be too painful for everyone to listen to me today. But Brandon, I was wondering, what do you call an auditor with a cold and a blocked nose trying to do a webinar?
What's that?
A significant deficiency.
Wow.
I think we could call this, the webinar is complete. We're good to go. Let's go home.
Need to get the mute button on Zach.
Yeah.
All right.
So before we kind of get into this, and I think Zach and Andrew both touched on it, I think to kind of role play a little bit here, some of the questions that I'll be coming out to Zach is probably more from kind of the auditor perspective, and then Andrew is kind of the finance director, CFO perspective. But again, you know, with their experience and backgrounds, I think they can kind of speak to both. So that being said, this slide really is kind of overall best practices. So it's the audit and accounting best practices slide. The first item you'll really notice here is communication. And you'll also notice kind of in the following slides a running theme with communication and really how important it is before, during, and after the audit. So Zach, I'll kind of start with you. What are your thoughts on maybe some of the common communication breakdowns that you've seen during the audit process?
Yeah, so I think normally the biggest area when it comes to communication kind of failures or breakdowns comes to just, you know, understanding the big picture. So kind of, I know one of the things that we often will, you know, work with, you know, try to do from the auditor side is to really kind of begin with the end in mind and then set milestones backwards. So there's of course deadlines where you've got the state deadline, the comprehensive annual financial report deadline, and other factors, you know, debt for some organizations, but oftentimes it's the audit presentation to say, hey, the elected officials only meet once, maybe twice a month. What meeting gets that done on time and what's that target? And then really from there figuring out, okay, well, how far in advance does the audit need to be complete to get it on the agenda? How far beyond that does a draft need to be ready to meet with management and so forth? So that's one where on the audit side, I know we try to plan for that. From the client side, what I have seen is there's times where if there is that goal and deadline to say, let's have something done on this date, making sure that that's known, you know, by the auditor, so that, you know, both sides understand here's the timetable and targets that we're really trying to meet. As long as that's happening at a very high level, the chances of any breakdowns are much smaller, would probably be on a much smaller scale if they even were to occur, I think.
Yeah, and Andrew, I mean, are there any maybe additional best practice, again, kind of from a high level perspective for the overall audit process that maybe you've kind of employed for, you know, again, to improve that communication process between both the auditor and kind of on the client side?
Yeah, I'd say there's no one size fits all approach. I think it really depends on each entity, and it really comes down to timing and frequency. So just excluding the auditor, just internally, you know, when should we have that first, you know, kickoff meeting to determine who's doing what are the, you know, roles and responsibilities of each team member within finance to produce information. You know, what's the best mode of communication depending on the size of the entities? Do we send out memos to the departments? Do we have, you know, phone calls, individual phone calls to each of the department heads to say, hey, we're going to need this in order to prepare this report that we know the auditor is going to need, that sort of thing. And then, you know, frequency, you know, so how often should we be conversing? And it really kind of depends on size, complexity of the audit and how many people are involved. So if everybody knows from that kickoff meeting, this is exactly what I need to do, you know, I'm the first one to say that let's eliminate pointless meetings, you know, useless status update meetings where we all know where we're all at. So why do we need to meet to talk about it? But on the other hand, if there's, you know, let's determine what the right frequency is, and let's have purpose-driven meetings. And if, you know, we need to have weekly status meetings because that's what's needed to keep people on task, because they're going to have questions on things, then then that's perfectly acceptable. So you just kind of need to find that right balance between, the timing, when do we start, and then how frequently do we need to get together to make sure we're all on the same page.
Yeah, that sounds great. And again, you'll see kind of a running theme here. We'll talk, more about communication through each process, each step of the way. But kind of next item, really having to do with electronic information. So if you didn't think having electronic information was important before 2020, I think it became pretty obvious the need for having either electronic supporting documentation or reporting. Andrew, can you kind of let us know some of your thoughts on maybe electronic information and some of maybe the obvious benefits of having that electronic supporting documentation?
Yeah, the issues with manual documentation is, one, where do you store it? And then two, how do you find it? And that can be challenging. Typically a lot easier with electronic files and documents, that we can have a more organized place where we can store them, retrieve them. And then even better, if we have a more sophisticated technology solution where we can give access to the auditors, then they don't even need to ask for them, that they know where to go to get them, and that can cut down on audit requests. So, I mean, that's obviously where the future is going, is whittling down our manual documentation that we keep, to where some entities I see are completely paperless, some are not even close, and then some are somewhere in between. But I think the end goal is, there's a lot more benefits to being completely paperless than more paper driven.
Yeah, and I mean, I think we could talk about, the types of electronic information for a while, but Zach, can you touch on maybe how not all documentation is really created equal? For example, Excel versus PDF versus even printed then scanned PDFs.
Yeah, so of course, I mean, we generally, from an audit perspective, always say, hey, we'd like this in Excel if possible, versus kind of a clean print to a PDF. And then the last resort is always a scanned PDF. What I have found, from working with different softwares is most programs, it feels like these days, are centered around saying, hey, we can generate this report out of the system, but even you get it in a PDF format or even the Excel format, there's 100 some odd columns and all these different merged cells to kind of make it pretty, where a lot of times I kind of get a report and I'm like, I just want the data. I don't know if that's the auditor in me, the Excel nerd in me, or what it is, but it's like, I just want the data, and then to be able to manipulate it my own way. One kind of just area on here, I think, worth everyone opening their mind to. I've had some areas I've been thinking more on how do we automate different things, is an overall concept of automation. Whether there's some that you can do in Excel, of course, with macros, where if you have a repeatable step, you can set up a macro to help do that. I know we have some Excel training coming up as part of this series. But on the automation side, one of our sessions actually coming up, the Beyond Excel, focuses on kind of this developing area of data analytics, of which a big part of that is automation, to basically kind of, step one is to identify areas where there's time just being spent. So, if it takes an hour to unmerge, filter, sort, and kind of go through all these manual gyrations to get a quote pretty report out of a system, that you really just need the data, but you can't get it in a CSV format or something otherwise. If there's any steps like that where there's something very intensive and time consuming and tedious to really just manipulate data from a report into Excel, one of the areas, again, that we've been making some improvements internally, but also just that I see there's probably tons of opportunities out there at probably almost any organization, is to kind of identify those situations and say, okay, how could we potentially automate this by using Power BI or some other software like that to just reduce all, get rid of all those manual hours, and kind of cut straight to the chase to get that data and have it in a valuable format.
Yeah, and I'll just reiterate to Zach's point again, if you haven't signed up already, I would definitely take a look at that Beyond Excel course, because I think there's going to be some pretty interesting information in there. And I think one of the, the presenter, Marie, one of the points she generally makes to us is if you're having something and it seems like it's too difficult, it probably is. So to Zach's point, kind of thinking outside the box to see maybe if we can improve, any kind of processes. So it's interesting, Zach, while you were talking about it, Amy Cork, and sorry if I said your name wrong, said data tables are the best, pretty reports are a pain, and merge cells are the scourge of the earth. Give me data and I'll make my own pivot tables. We agree. I mean, if you can give us the data, we can work with that data. It makes things a lot easier on our end.
Absolutely, and that's just one. I mean, generally, I always focus on just to conceptually, again, whether it's data or otherwise, to always look at, how can you automate, how can you standardize your processes? Because there's lots of areas, sometimes on the financial reporting side, some of that's more recurring, on a monthly basis, but anything when you're doing it once a year for the audit or otherwise, things that you don't do frequently, it's a lot harder to standardize those and automate those, but wherever that can be accomplished is always going to be a huge, not just time saver, but also hopefully help improve accuracy and otherwise, versus it kind of being a very manual step that you've got to go refer back and kind of say, okay, how did we do this last year, and that type of thing.
Absolutely. And we had a question, where do we sign up for the Beyond Excel? Jennifer, we'll have a slide at the end with how to sign up. You can also go to our website, www.jmco.com, go to the government page, and there's also a link to the article where we've kind of shown all the different courses you can sign up for. And if obviously you're still having issues, you can reach out to us. So on the use of technology, somewhat related to everything Zach's talking about, obviously there's a wide array of technology out there, but really wanted to kind of touch on maybe some more specific items. So Andrew, really kind of interested to let you start and kind of some of the things that your firm's currently working on and rolling out to clients and prospects.
Sure. On the technology side, we've been developing a cloud-based ERP solution for governments. A lot of the things you're talking about just with reporting, is critical, and I've seen it, on the audit side, getting reports that try to look pretty, but we just want to try to sum the columns. It's in a text file or PDF and requires significant manipulation. So, just our reporting solution will be able to pull any field or column from any data tables that you want, put it together, export to Excel, because at the end of the day, you just want the data. Some other cool things, relevant to what we worked on and, what we've implemented within our audits and audit preparation is our task management solution that will allow us to take audit requests and delegate that to different members of my audit team to work on, and then submit via workflow approval to me or another team member to review and approve, and then ultimately submit to the auditor. So a lot of cool things that we're doing in task management, and on the audit side being one of them. So and that's helped gain efficiency and help determine roles and responsibilities surrounding who's responsible for what audit areas within my internal team, so we can get the right information to the auditor.
That's great. Zach's, we included some on here, but what are some of the tools that you find generally pretty effective to make our audits run better?
Yeah, so the most common we use, we've got ShareFile for our client portal. Kind of to Andrew's point, in working through his software on one audit last year, one of the cool things to me with there was, if there was an audit request, we would kind of submit it through that portal, and it's kind of like a ticket system almost, where you would see, okay, this has been addressed and been closed out. So one, it provides a trail. Two, it helps kind of everyone know what's out there, because as someone initially solely on the audit side, I always hated to see an email back from a client that said, hey, we sent this to you 2 weeks ago. You asked for some document. Oh, we already sent it to you. Here's this document. That always, would make me cringe, just because you don't want that to happen. So, we're just no one's wasting anyone's time. And it, yeah, same experience, just as painful as I dreamed of. I got some of those questions on the auditee side and said, oh yeah, we already sent you this, and whatever else. So again, to me, it's any of those tools that can say, okay, how do we, again, on either side, be able to track and know that, something has been sent, and then know that it's been received, so that, kind of going back to communication, there's not a, oh, hey, we sent you this, or, oh, hey, could we please get a copy of this document? And then, oh, well, we've already sent it to you 2 times. That's what everybody always wants to avoid. So, by using some of these tools, that can hopefully help mitigate some of those issues, and again, keep the entire process efficient for everyone on both sides.
And Zach, just to piggyback on that a little bit, I know it does feel like we operate a lot with the numbers, but I do feel like a lot of what we do is relationship based. So I guess on the flip side, what are some of the drawbacks with, I guess, leveraging or over leveraging technology and possibly limiting some of those personal interactions?
Yeah, so the audit everything operationally, it's still about, it's a people process. The finances don't run themselves without people. The audit, can't complete itself without people and the judgment behind it. So there's tools, I think, to help with the efficiency, but that people element and knowing, understanding what's going on, and having those conversations, that can never be lost or be out of sight. It's got to still be a core part of the entire audit workflow and process.
Mm-hmm. So similar to other organizations, as a firm, we had to pivot pretty quickly from primarily being at client locations or at our office to being completely remote when kind of COVID hit. So after a year of being mostly remote, there are definitely some lessons I think we've learned, and probably even a few things that were positives in the light of the entire situation. Just finding that silver lining. I can think of a few benefits of working remotely, namely working in my pajamas. But Zach, what are some of maybe the pros and cons that you've seen with kind of both sides of being remote and working on site?
Yeah, so I think the biggest con, as we talked about with electronic records, is for any organizations that do not or did not have electronic records, it was a major challenge, both from a record side and from the accounting system side, where I know I worked with a few clients that have gone through ERP system implementations the last couple of years, and in most of those cases, if COVID had been, let's just say 2 or 3 years earlier, there would have been many more organizations, I think, that would have been kind of between a rock and a hard place last April and May, where it would have been, no one's working remotely. You've all got to be in the office because that's the only way to access the accounting system and the records. We've seen some cases where organizations have gone and said, this was the straw that broke the camel's back to move towards an electronic records management system and otherwise, versus relying on paper copies. So I think that's the biggest kind of challenge as part of it. On the pro side, of course, it provides everybody a little more flexibility, a little more opportunity to work through things, regardless of having to worry about logistics. If someone's got to get some work done at home or something like that. So it definitely provides some benefits there. I think, for just allowing everyone to kind of work a little more streamlined, as well as to get things electronically from an audit perspective. That also helps streamline the audit process. And it's probably a pro or a con for different people. I know for me, I like to be out on site with clients. I know some people enjoy having the auditors on site, but many, it's okay, the faster we can kick them out of the office and have them out of our hair, the better. So that's probably one kind of on more of a case-by-case basis.
Yeah, and I think it was kind of interesting too that we had some clients that were saying, absolutely we can't do it remote, and then when it push came to shove, we were able to do it. Thankfully, we were able to kind of work around it. But I guess, Andrew, do you have any additional thoughts, going remote versus on site, and maybe some of the other pros and cons you might have seen?
Yeah, I'd say it depends on the situation. Generally, I'd be a fan of remote with on-site as needed for meetings and whatnot. But if you've got an entity that has a lot of manual documentation and you're requesting, it's just a lot easier for them to grab the folder and bring it to the conference room where you're sitting and have you look at it. But if it's a situation where those files are readily available to you electronically, I think it's just as easy, and sometimes when the auditor is not there, then maybe the city staff or local government staff are maybe less focused on completing what's needed, for the audit, and it can kind of drag. So that could be an advantage of, okay, we're going to be on site. And then there's just that natural feeling that, hey, when the auditor's on site, we can't ignore the auditor. We gotta, respond to their needs, make sure we're get them what they need. But if it's if the entity is well prepared, the information's there, and it's just a matter of the auditor digging in and getting it, you could easily arrange an audit start to finish where the audit team's coming on site maybe, a few times, mostly just for meetings and touch bases.
Great. The next item, it's kind of goes similar to when I think about planning versus interim and fieldwork and reporting. One of the things I was kind of thinking about was those milestones that Zach kind of pointed to on the communication side. So I'm interested, Andrew, I guess maybe on the internal side, do you build out milestones maybe differently than we would say on the audit side? I mean, when we come to kind of the thoughts and questions as to what due dates internally, how are you kind of addressing that or working through with staff?
Yeah, for sure. That's critical because, we'd like to communicate with the auditor maybe on an interim basis and say, okay, let's say final field work. Okay, when you want to be on site? When are you going to give us the request list? And if you can give us the request list early, then that's even better with due dates, so we know, and that's going to help us to determine, okay, we definitely need to have these items ready by this date for internal review to then get to the auditor by the intended date. So the more we can work with you all in advance to know what those items are and what your general timing will be, then we'll put together our internal calendar of, okay, here's what we need to have done and by this time. And then, whether we're using task management software or good old Excel or Word with, columns of, date needed, responsible person, whatever works, different strokes for different folks in terms of what technology medium you want to use to track it all. But, setting internal deadlines is definitely important.
Yeah. And kind of to wrap up this slide, because we are kind of talking about overall kind of best practices, I think we're constantly thinking about how we can become more efficient and effective. And one thing we kind of wanted to talk about, and Andrew, kind of want to get your thoughts on, is maybe some things for clients to think about as far as what accounts may be more important to reconcile throughout the year versus at year end.
I mean, the obvious ones during the year is making sure you're up to date with cash and reconciling the bank and all your investment accounts monthly. You don't want to let things slide there. It'd be great if you're maintaining, fixed assets and tracking, properly recording additions, disposals as they occur, instead of trying to wait at year end and compile all your entries to your capital outlay account. So being able to manage that throughout the year, as well as debt, if you have a roll forward schedule that you got to prepare with throughout the year, you can update that roll forward based on, any payment activity, especially if you have any new issuances, getting that squared away, as they arise, instead of trying to wait till year end to put it all together. Other than that, most everything is going to be, adjusted through year end. I mean, accruing payroll, doing a certain, internally looking, accruals and AP. I mean, unless you're trying to really on a quarterly basis put together audit ready financial information for whatever reason, if there's no requirement to do so, a lot of those accrual type entries, we can, even prepays and those sorts of things. Inventory, let's do all that once at year end.
Thanks, Andrew. Just because I didn't realize how talkative of panelists I would have, I'm going to go ahead and move on to the next slide, Zach, if that's okay, and do our polling question. So the first polling question, if you could have one superpower, what would it be? Just a quick note, you should see the polling question in a blue box. If you don't see the box, you may need to exit full screen mode or to view it. If you're still having issues, feel free to submit your answer in the Q&A feature. So as people are answering, start with you, Zach. What would you do? Fly, invisibility, strength, or speed?
That's a tough one. I think I would go with invisibility because then, we could do some extra special audit procedures.
Of course, you would have the audit perspective. Andrew, what about you?
I mean, it's got to be fly. I mean, can't think of anything better.
I agree. I'd go with fly. I'm going to give everyone a couple more seconds to vote. And again, if you have are having issues, feel free to do the Q&A as well. One of the questions is, how fast is the speed? As fast as you want it to be, I guess. All right, I'm going to go ahead and close it. And there we go, flying invisibility. I feel like you guys persuaded everyone. All right. All right. So interim and planning considerations. So this is kind of my attempt at making accounting exciting and comparing it to a spaceship launch. So, as the picture kind of indicates, we need to kind of get ready for liftoff in this phase. We need to make sure we're developing our launch checklist in our planning phase of, the audit engagement to ensure we're really ready for as smooth as a flight as possible. It's also really important that our clients understand some of those major milestones that Zach and Andrew talked about to make sure we're on target for our scheduled launch, which really is, when we pencil it down, that financial statement presentation. So before we get into the bullet points, I did have an important question for Zach. So Zach, where do keyboards go to have dinner?
Where do they go?
The space bar. So speaking of space bar, I was thinking about throwing a party in space. Do you think you could help me plan it?
Nope.
That's all I got. I'm just going to assume everyone's laughing right now with me and not at me. That's my addition or my value add to this presentation. I think the obvious question, Andrew, though, is did I include the spaceship analogy as an analogy or for the joke?
I don't even know.
Yeah. In all seriousness, though, the phase of the audit's pretty critical for our success on both the audit and the client side. So before we get into kind of the items noted on the slide, I was hoping, Zach, maybe from a 50,000 foot perspective, you could kind of explain what those phases look like, just to kind of clear up maybe any uncertainty or if there's any viewers that might not be aware of what that is.
Yeah, so I'm actually doing a presentation tomorrow for the Florida Tax Collectors Association, and I actually have a quote in there, like as heard at James Moore, that audits are won and lost in planning. So that definitely holds true. Talking about this to say that it's kind of all about the planning. One, the efficiency standpoint. There's it's all audits, for a municipality or county are September 30th year end. So it's kind of like, the April 15th tax deadline. You can't just move audits conveniently throughout the year and spread the work out evenly. You're going to have that crunch time. So, what we try to do, both to help out internally and kind of make the audit a seamless process for everyone is really, have the audit well planned out in terms of what the procedures are going to be so that we can submit, a request list of here's the items needed. Again, we're hopefully, like Andrew said, if, the documents are there, the audit should be fairly seamless. But the goal is, you've got to have the right list of here's what's needed for the audit. There's always going to be follow-up questions and items, but the more from the get-go that there's a clear picture of here's what's needed, and then that's what gets provided, that really helps from an overall, again, efficiency standpoint, where if all that planning is done to establish that, to kind of play out that way, that could streamline the entire process for all parties.
Yeah, that's great. The first item here, and again, we're going to be, most slides are going to include this. Communication's key. I think we've kind of covered this pretty well. But again, we want to be communicating throughout the audit, before, after, and just making sure that everyone's on the same page. Really, our game plan for kind of interim and planning is always including walkthroughs and tested controls, and really determining what that approach looks like. Zach, do you mind touching on what I mean by walkthroughs and tested controls, and why it's critical that we get those done during our planning and interim phases?
Yeah, really just, based on looking at are your payroll controls functioning, and, accounts payable, utility billing, and so forth, by understanding that, a lot of the audit plan could be determined based on, are controls designed appropriately, and then are they functioning? So by getting that all done again ahead of time as part of that planning interim phase, that helps kind of narrow down to say, here's what the picture is going to look like when it comes to field work. As part of that, kind of the next bullet point too on the risk assessment is really, it's a chance to kind of update there and say, hey, are there any other new risk areas that should be considered? There's kind of certain areas that we look at from an audit perspective when it comes to like any restricted dollars. Say, hey, are those being utilized appropriately? Areas like utility bills are another sensitive area. Kind of a risk assessment where this should be done internally on the client side as well, as you kind of say, what could go wrong? What if it went wrong would be a front page story in the local newspaper that we don't want to happen. That's how we sometimes think about stuff from an audit perspective, and that's at the same time on the internal side, the way I would look at it as well, to kind of say, forget the audit. What do we just not want to potentially run into or have happen? So I think it's very similar in terms of that risk assessment process, whether it's internal or external.
Yeah, I guess, Andrew, is there anything on the finance director seat that you found helpful, maybe when preparing for narratives or providing support, or kind of anything getting ready for, again, those walkthroughs or tested controls that we're trying to get done during interim?
Just having a good starting point, so templates that we already have, and know where those are, and know what needs to be updated. And so knowing what your expectations are in terms of documentation, and do you just want memos from us? Especially if it's a new auditor-auditee relationship, what are your expectations for understanding internal controls? And so instead of us maybe guessing, I think this is what they're going to need, maybe we have that conversation up front and say, oh, we've got templates we just want you to fill out, or hey, a memo explaining the process and related controls, for each of your significant audit areas is sufficient. So getting that out of the way, especially important in new auditor-auditee relationships.
Yeah, that's great. And Zach did kind of touch on that risk assessment and audit plan. And part of that, when we're going through and completing our procedures, we're hopefully building out a request list based on, again, what our audit plan and that risk assessment ultimately is. So Andrew, from your kind of perspective, how important is to get maybe an updated request list, a month or two out from final fieldwork, and any advice as to how you fulfill that requested items, as far as delegating items to staff and overseeing that process?
Yeah, the sooner we can get it, the better. So that helps us, gives us longer time to plan. So, we'll take it as soon as it's available. And then, the delegation plan, again, that'll vary entity by entity. You want to put people in the position to succeed. So don't give a new staff accountant or an accounting clerk, hey, go figure out OPEB. Good luck, right? So does the person have familiarity with the area? If not, and you want that person to complete that area, then you got to sit down with him, her, and really go through it and make sure that that there's a full understanding. And then once that understanding is built, now that person should, you know, on a more ongoing basis, on a long-term basis, be able to run with it a little more independently and just have good, hopefully documentation to start from. So I want you to do OPEB, but here's our work papers and here's our internal work papers and an explanation of where we pull the documents and how we get the balances. The better your internal documentation is, the easier it will be to execute on it.
Yeah, that's great. So the next three items, the census data testing, pensions, and single audits, you know, which is kind of specific, and we may or may not be testing during the audit process. And again, it may not be relevant for all audits, but I think it's useful to realize that some of that testing could be started early and or possibly even completed before final fieldwork. So Andrew, I guess specifically on that first one, the census data testing, what are some of the things that we can accomplish and get out of the way now so that we're not having to get it done during final fieldwork?
Yeah, I mean, especially if it's a beginning of year evaluation, like if you can get your, if OPEB is beginning of year evaluation, even better if it's in an off year, then we don't have to test census data. But if it is, whatever we can get between pension, OPEB, get a census report ready at interim so you guys can test that, so we're not chasing that down at final. If that's, to me, that's a good one to be able to have ready for you and request that we get that tested on an interim basis, since the balances aren't going to change from interim to final. So why not knock it out interim?
Yeah, and Zach, along the same lines, specific to pensions, anything that, you know, we can try to get done now before fieldwork starts?
Yeah, I mean, really the focus there is normally on the transactions. Obviously, you can't test the year-end investment balances mid-year, but looking at benefit payments and otherwise to say, okay, are proper amounts being paid to the retirees? You know, that's definitely an area of focus, and one that can be a common issue. You know, we've seen more often than not, you know, on audits where you've got independent administration of a local city pension plan. You know, sometimes there's been changes in management or external administrators, and the record keeping is kind of, you know, fallen, you know, off piece by piece over the years, and it's hard to kind of pull together a lot of those supporting documents. That's one area, one that we can do, but two that I would, you know, kind of caution anyone with a defined benefit plan to, you know, you want to have some degree of comfort, even though, yes, the pension board is separate, because that still does roll into, you know, a city's financial statements, for instance. You know, that's still an important area to look at and be sure that, hey, are good records being maintained? Should there be some redundancy in your organization versus solely relying on an external party? So that would be kind of, you know, one area, and also one thing as far as what could go wrong. And like Andrew said, if a pension or an OPEB valuation is being done in arrears, where you're using the numbers from a year ago, you know, everything with regard to that valuation, of course, that could get knocked out ahead of time as well.
Thanks, Zach. So on the last bullet on this slide, you know, I'm going to start with Andrew to kind of discuss some of the single audit work that we get done early, and then have Zach kind of wrap up with his thoughts on ARPA, or the American Rescue Plan Act. So Andrew, you want to touch on some of the things that we can, again, complete early, kind of during our interim procedures for the single audit specifically?
Yeah, if we can just get a CFA, an interim CFA, maybe as if we're 9:30 year end, get an interim CFA done as of 6:30, and then have you all test that. Could it be a little dicey? Maybe, if there's a lot of subjectivity around that last quarter of the fiscal year, that it could change a major program determination. And if there's any question, let's not do it. But if you know that there's one or two grants that really dominate your you know, your single audit, your grant, federal and state grant expenditures, that you know that are going to be a major program just purely based on coverage, to me it makes sense to try to knock out some interim testing on those.
All right, Zach, I'll have you wrap up this slide and again give us kind of your thoughts on ARPA, and you know, maybe what some of that money should be spent on.
Yeah, so of course, so the federal government did issue that guidance, either whatever it was, last week or the week before, I believe. Losing track of my weeks now, barely know what day it is. Yeah, so we do have the initial guidance, kind of, looking back a year ago with the CARES Act and what we saw there. First we saw it on the, kind of the private side with the PPP loans, where that, guidance continuously evolved. The PPP program kept changing. I know I had some conversations with different individuals last year about the coronavirus relief fund dollars to say, hey, what should we spend this on? And it was questions saying, well, okay, here's the eligible uses. And I think most governments said, okay, we could spend X dollars, but only 10 or 20% of that actually, you can only buy so much hand sanitizer for all the dollars that came out from the CARES Act. So I had some cases where I was like, well, that you had to spend by the end of December last year, so you didn't have much flexibility. But still, I was like, let's kind of wait and see. And then it was about 6 months after the CARES Act, the federal government came out and said, hey, any public safety payroll, that's now an automatic eligible use of the CARES Act dollars. And there was nothing to really have to even substantiate. It was just, okay, did you have police, fire, or EMS payroll equivalent, or at least equal to what those CARES Act allocations were? And it was kind of an automatic free pass versus, I know in some cases we saw dollars get spent because before the feds changed the rules, it was, well, we got to find something to spend it on. So my biggest thought with regard to ARPA is really to not rush it. We do have until 2024 to spend those dollars. I'm sure there'll be further clarifications and otherwise. So that's kind of my biggest takeaway, to start working on plans, but don't jump the gun unless there's a definitive, hey, we absolutely want to do this project, it's a great fit for those dollars. And otherwise, because again, there will likely still be some ongoing clarifications and or just changes to that guidance over time as questions are submitted to the feds and then ultimately answered.
Yeah, and Zach, I think we have a webinar in July that hopefully will be covering some more information on this as well.
Yeah, that single audit and ARPA update, I'm sure will probably be an ARPA update with a small touch on single audit, but probably largely focused on what we know about ARPA at that point in time, which I'm sure will be more than we know about it today.
So sign up now. All right, so we're ready for launch, but we'll actually go into the second polling question here. And yes, I did create all these, so you can make fun of me. So if you weren't so awesome at your current job, what would you be doing? Again, just a reminder, you should be seeing the polling question in a blue box. If you don't see that, try exiting the full screen. And if you're still having issues, use the Q&A feature. So while they're doing that, Zach, what about you? What would you do?
I mean, pro athlete, of course. Although I would be a food connoisseur if I was guaranteed, I couldn't gain any weight in doing so. Then that would take priority.
Andrew, you've got to be a YouTube influencer, right? I can't influence much. I think I might go with the athlete as well, but I'll do more travel blogging on my off season.
There you go. All right, I think that's good. I'm gonna go ahead and close that. And then, oh, we got a bunch of foodies, whinies, and coffee people. Oh, travel blogger actually is the winner. Interesting. All right. All right, moving on. So now we're in the final fieldwork. So again, we've wrapped up planning and interim procedures. We're working towards the final fieldwork to hopefully finish the remaining part of the audit. As we mentioned before, we've sent out the request on it in advance to Andrew and his team. We're starting to gather that documentation and, really having those day schedules, setting those expectations of when we're getting everything completed and out the door. Obviously there's kind of a wide array of things that we could cover right now, but we wanted to kind of touch on the things that we see more issues on. So the first one being, again, reconciling account balances. I know we mentioned a few slides back, kind of the importance of reconciling account balances either at year end versus throughout the year, and Andrew kind of went through what that looked like. But when I think of final fieldwork, we're really focused on, all account balances being reconciled and agreeing to whatever either detail or support there may be on hand. Andrew, let's start with you, I guess, on your kind of your approach with reconciling account balances and maybe some specific areas you know will maybe need more attention or consideration before providing the trial balance to, the auditors?
Yeah, I mean, fixed assets on your list, that always seems to bite people in the butts, and making sure you're reconciling capital outlay to your capital asset additions before you send that over. Don't just for your accruals and here's our accounts payable detail. Make sure you go through your own internal search for unrecorded, that you've looked through some of your larger transactions subsequent to year end, because the auditors are going to do it. So let's catch it before they do, and then even give the results to the auditors and say, hey, here's what we did to ensure that we got a complete population of accounts payable and related accrued liabilities. And that probably just would make your jobs easier, because from there, controls around our closing process, and then what we've selected, and then the support's already right there for you. If it's something that you would be selecting anyways. So yeah, those are a couple big ones I've got.
That sounds good. And just to be mindful of the time, Zach, I'll actually I'll probably move on to the next item because I know we still have a few slides to go through. So, I know Andrew mentioned fixed assets. I know one we've seen a lot of issues with is fixed assets, but kind of want to get your thoughts and maybe see what are some of the issues you've seen and maybe some suggestions that may help with resolving that.
Yeah, so the first kind of step one is just the reconciliation process. Kind of go through, okay, what are the capital outlay expenditures, and say, okay, are these all capitalizable, to identify and really reconcile where you should be able to kind of take, okay, what's your capital outlay expense versus what's getting capitalized, what are the items not getting capitalized, and then kind of identifying if there's anything that has been capitalized that wasn't charged to a capital account potentially when it was originally recorded in the general ledger. So I think going through that reconciliation process, identifying the source of those expenses can be a huge help. So if there's questions as part of the audit to say, okay, we can't tie this out, where was this charged that got capitalized, that can always be helpful, because one area that can sometimes cause confusion relates to CIP. When you've got construction in progress, we've seen cases where that might get double counted in terms of the prior year balance plus current year expenses, or sometimes pieces are overlooked because you've got that roll forward over multiple years. Once the assets are identified, the feedback I've heard in a lot of cases is that a lot of government accounting systems really, the fixed asset module is almost an afterthought, so to speak. So it's just not particularly efficient to work with in some cases. Is oftentimes what I've seen is kind of one of those major stumbling blocks, because conceptually it's not that bad. You add the new assets, run depreciation, and in theory everything should just work itself out. But oftentimes I know there's just issues with those modules, recognizing the assets right, handling disposals right, and so forth, that can be a challenge to work through. We've seen some clients that have moved to kind of an outside of the ERP fixed asset depreciation software. Those generally run pretty cheap, pretty easy to work with. I know, like the one that we use, we just get all in Excel, import all the new assets, and it's a pretty seamless process. So for those that do have a painful experience getting fixed assets reconciled, looking at some of those external softwares might be something to consider to try to help streamline that process.
Right. Kind of another area of confusion I know that we've seen is over state revenue, including, the communication sales tax, absent sales tax, revenue sharing, and, other revenue streams. And really what should and shouldn't be accrued, how many months should be accrued. So Zach, do you mind kind of touching on that and kind of the explanation as to why revenues are accrued differently?
Yeah, so for most counties, municipalities, there's the general state revenue sharing. Then you've got your kind of sales-based taxes, like your sales tax, gas tax, communication service tax. The state revenue sharing, that's basically the month it's paid is the month it relates to. The state explicitly says that's how that is handled. On the sales taxes, where we kind of see the difference in practice at times. Could be a 1 month accrual versus a 2 month accrual. From an overall flow of the dollars, it generally is that 2 month accrual, because what you have happen is month number 1, or let's call it month 0. In month 0 is when businesses are collecting sales taxes from their customers as they go in and buy something from the store. Month 1 is when the vendors have to remit those dollars to the Department of Revenue. Month 2, that is when those revenues get dispersed from the state to the local governments. Normally, it's been a conceptual discussion, but in terms of really kind of seeing that in action, if we go look at pretty much any local government sales taxes in 2020, it was the June disbursement for the April sales taxes when those dollars went off a cliff. That, of course, is when the state was pretty much shut down the month of April due to COVID. And seeing that 1 month of the shutdown, it's very clear that that was the April month that was dispersed out in June. So that's kind of why there is that 2 month lag on many of those revenues.
Yeah, I know that's one we get questions on too, especially with some newer clients. On the fund balance classification, that's another one. Again, we've seen confusion over. We see clients have difficulty either understanding the different categories or even how to track that activity. Andrew, do you mind giving us, again, your perspective on maybe your approach when it comes to thinking about the classifications and also tracking that related activity, maybe for kind of the restricted or whatever it may be?
Yeah, sure. So exactly knowing what the balances are. So that's step one. That's critical. So if you've got a number of different commitments, okay, what are they? What's the nature of them? You need to know that for financial reporting, at audit time, but also it's very helpful to know at budget time, because you want to make sure your elected officials know exactly what's been committed in years past and what's left on those reserve balances. And then absolutely tracking is paramount, because if you don't know your ins and outs throughout the year, then how do you know, how do you get to your ending balance? Some of it might be obvious that it's just based on, X and Y, and that's how you get the ending balance. But a lot of it is based on, here's what we had at the beginning, here's what we brought in, here's what we spent. So it underscores the need to have in your general ledger, if you want to track it with a project number, have something in your GL account string that triggers that this relates to this type of commitment or assignment, for example, a restricted balance. And if it's a revenue, it's got this number, like a project number assigned to it, it increases the balance. And then on the expenditure side, if it's got this identifying number associated with it, this is what depletes the balance. And so if you don't know that, you need to be able to track the ins and outs of your various fund balance categories appropriately.
Right. The last item here, budget versus actual. Zach, if you can kind of put both hats on, your auditor hat and your finance director hat roll on, kind of give us your perspective on maybe both sides as to what we're looking at on the audit side versus what you're thinking about maybe from the finance director role.
Yeah, so there's two sides on the budget. There's the the traditional management tool that a budget normally is, and then there's the government side where there's the legal compliance element of it. So governments have 60 days after the end of the fiscal year to do any budget amendments subsequent to year end. Where it gets more interesting is some governments, by charter or otherwise, they've established that their level of budgetary control might be at the department level versus just at the fund level. So when you're at the department level, you have to get a lot more granular to ensure that you're in budgetary compliance. But generally, kind of my philosophy on budget is to only amend the budget when there's a major change in circumstances during the year, and then do kind of the year-end look to say, hey, are we in compliance with the budget, or is there something that we might need to do an amendment for? I've seen cases where there's lots of amendments during the year, even some at year-end to amend to actual, which that can be very dangerous, because if you amend your budget to actual in November and then in December you get a couple more invoices that you weren't expecting. Well, now you're out of legal compliance. So I normally highly caution against that and really focus on using it as a management tool as much as you can, but still take that final look at year end to ensure that you're legally in compliance as well.
Great. Thanks, Zach. And if you haven't gotten anything from this presentation, hopefully you understand communication. Again, hopefully we're communicating. There's no surprises. We're all on the same page. So again, no different from any other slide. So with that, we'll move into the next polling question. And I have to give a shout out to our higher ed leader, Katie Davis. I stole this question from her. So would you rather fight one horse-sized duck or 100 duck-sized horses? So Andrew, I know you've been thinking about this. What's your answer?
I'm just nervous about those little 100 duck-sized horses. They have teeth. I saw Jurassic Park 2 where they had those little mini dinosaurs, but they all gathered up and ate that poor guy. So with that in my head, I'm going with the one horse-sized duck.
Okay. What about you, Zach?
I think I'd go the same. I mean, it's a horse-sized duck, but I mean, ducks don't seem that mean, do they?
I don't know. I guess we'd find out. All right, I'm gonna go ahead and close this and share it. So I probably shouldn't put an option of what. All right. So just being mindful for time, we do have 10 minutes, so I did want to kind of cover a few more things before we wrap this up. This slide we didn't go crazy on this one. Again, it's kind of the reporting side of things, but did want to kind of talk about a few things. So Andrew, again, I'll kind of start with you. Pretty straightforward, but again, from the client's chair, what are you expecting as far as what are you preparing to get these financial statements really drafted?
If I'm preparing the financial statements?
Yeah, sorry. So what are the kind of the tasks that you're trying to, either the reports that you're trying to include or prepare or provide to the auditors? And then, the second bullet, we'll talk with Zach on kind of thought process as far as the financial statements, the numbers themselves, and how those are getting prepared as well. But, on the slide here, we've got the MD&A, management response, impact fee affidavit. Obviously, there's a number of reports we want to include. So just kind of high level thoughts of what you're thinking about when trying to get these out the door, and maybe some things that you have to navigate or think about to make sure you're not missing.
Yeah, just try to have no surprises. So, I mean, the impact fee affidavit was a bit of a surprise because that was new. So trying to tackle that as quickly as possible. And that was challenging for one entity I worked with because we had to get information not only for unincorporated county, but also for all the municipalities that collected and remitted part of that revenue to the county. And so that was quite an undertaking, but we did tackle that early, thank God. If we waited the last minute, that would have been disastrous. So just knowing what are our reporting responsibilities, and if there's a delineation of duties between us and the auditor, okay, what are they? What are we responsible for? If we're responsible for the MD&A, the whole thing, or are you preparing a pro forma and we're filling in the blanks? So knowing that up front to avoid any of the last minute stuff.
Right. And Zach, I guess the second bullet point, kind of just some high level thoughts on, as auditors, how we can potentially assist clients with preparing financials and how there's some efficiencies there.
Yes, I mean, there is a threat to independence, if the audit firm prepares the financial statements, but it's not something that just can't be done. So I know in most cases it's done. We have made where we do it at the city of Lake Helen. It was one where kind of my intent at first was let the auditor do it, but then we were able to do it more cost effectively, so we did that there. But again, I think a lot of it kind of comes back to the whole idea of automation and repetition, where the auditor, there's we've got software built out for, and we're preparing hundreds of sets of financial statements a year. Where on the client side, it comes back to, this is a once in a year activity. So from that overall efficiency standpoint, and otherwise, that's why I think in a lot of cases, there is a lot of that defaulting to, hey, let the auditor prepare this, because that's just like the audit. It's kind of what we do versus once a year different type of report workflow.
Right. And just to wrap up this slide again, communication, we don't want any surprises. So, hopefully we're working with Andrew and his team. We're communicating any issues that we're finding early in the process. So again, if we do have findings in the report, those are already known and there's no questions on that end. So Zach and Andrew, if you're okay with this, we'll do kind of a hot take on the next few slides because we do have 5 minutes left. So Zach, if you want to hit maybe a couple highlights on the single audit piece, and then Andrew can kind of hit the other item side.
Yeah, so some of these are somewhat more on the auditor side in terms of how the auditor reports get presented, but it also does roll through the data collection form, and some is responsibility of the auditee. The single audit side, if you have a federal single audit, you are required to disclose whether or not the 10% de minimis indirect cost rate was used. The type A program threshold does have to be disclosed. For state, it's a little bit of a different calculation. So that is one where we've seen sometimes, looking at just a random report, that might not be calculated right. And then one federal interpretation, I don't know if they're still holding true to this, but a couple of years ago, if you had prior audit findings in your federal single audit, the federal government was very emphatic that they wanted the schedule of prior audit findings and the current year corrective action plan to be on separate pages, even if they were both, one sentence apiece. They insist on those being separate pages. So just a heads up and a warning there.
Thanks, Zach. And I guess, Andrew, again, if you don't mind touching maybe on a few of these, I think they're pretty straightforward, but any thoughts on kind of the other items noted here?
I mean, mainly the third one. Let's try not to get it to be a three-peat, so you don't have to deal with the JLAC or the Joint Legislative Auditing Committee. And whatever the finding is, what can we do to remediate that so it doesn't keep repeating each year, and have a plan to address.
Yeah, I think this one is kind of driving point that we don't disclose that it's a repeat finding too. And I know in the state of Florida, the AG is pretty good about pushing it back and telling us that it needs to be indicated as a prior year finding, but that is one that we've seen before. So
yeah, I will though, on those three-peat findings, if and when they're there, Andrew referred to the JLAC, the Joint Legislative Auditing Committee. The Auditor General does forward those reports to the JLAC. They send out a NACI-gram that, if you're not expecting it, kind of can throw everyone for a loop. But I do just want to highlight, yes, it's critical, it has to be replied to, but it is a standard part of the process. So I would just caution, it's important, it has to be addressed, but don't be as alarmed as you might be if it kind of catches you totally off guard. Especially because those will be after the fact. Usually, I know the FY19 comments, we saw some of those coming out just this past spring, about a year after those audits were complete.
So other areas, Zach, do you want to just touch on, again, CRAs are new this year. When they come into effect, as far as when we have to have separately stated financial statements, and maybe one or two things you've seen going through the process this year?
Yeah, so just kind of a reminder, all CRAs with expenses or revenues over $100,000 now are required not just to be audited as it was, but to actually have a separate audit report issued on a full accrual basis in the name of the CRA. So that has been a big change this year. Areas where it gets a little gray is with capital assets and debt, to say, well, do you have any assets or debt in the name of the CRA, even if those resources are being used to pay for those capital or debt items? We've normally taken the approach to say that unless it's explicitly in the name of the CRA, those dollars are kind of being spent on behalf of the city. Then on the compensated absences, kind of reminders there, really on the retirement side, that if you have retirement contributions as a part of a defined benefit plan, like FRS or your own pension plan, those retirement contribution amounts are not to be included in the compensated absences calculation. GASB has said that the impact of those contributions are already covered in the net pension liability.
Zach, do you want to kind of speak on the capitalization policy and kind of thoughts on, again, what the policy could be set on and what the benefits of, again, a higher one versus a lower one?
Yeah, so what we've seen, the state of Florida increase their threshold from 1,000 to 5,000 1 or 2 years ago now. So we've generally recommended looking at increasing that threshold, at least for financial reporting purposes. It just makes things a little bit easier to track as far as depreciation and otherwise. Your physical asset controls may still be centered on a lower threshold, but from a financial reporting standpoint, there's going to be very few and far reasons to say let's be below $5,000. And then on the hurricane side, hopefully we have a quiet year this year, but just a reminder again that any FEMA dollars related to hurricane recovery, those only are expenditures for single audit purposes when they're obligated by the federal government, not necessarily when those actual expenditures are made.
Great. So Zach and Andrew, thanks again for all the great information. We included here a link to register for the next webinar, which is a week from today, Weathering the Workforce Storm, which is going to be a great presentation that's HR related, so make sure you register for that. If you want to go to the next slide, Zach. We don't have any additional questions, so I think we're good to go. And then if you still have questions today, feel free to reach out to Zach or Andrew. Their contact information is here, as well as the slides you were able to download. Finally, here are the rest of our CPE series topics for the rest of the year. You can click on the links or go directly to the registration page. Below, you'll see the link to complete the evaluation form, which will also be emailed out to obtain your credit. Once again, thanks for joining us and have a great rest of the day.